So, hi everyone, my name is Grace and I head up the financial regulatory team in Gibson Dunn, Singapore. I support a range of banks, asset managers, and fintech companies, and in the last few years, a lot of digital assets firms in relation to their licensing and regulatory issues in Singapore, as well as on their commercial TMT associated needs. I think the recent crypto turmoil is an illustration basically of some of the underlying vulnerabilities which have been present in the market in terms of exposure to certain players or the systemic impact of some of the lending and other crypto related models that were running the market. But I think going forward, a lot of entities are looking to boost capital, improve products and services, enhance due diligence in relation to third parties and counterparties to enhance their ability to withstand shocks like these, and also in terms of investment risk to really consider a lot of the liquidity impact in terms of how this may also affect underlying reference assets like stable coins in the market. So for example, when we are reviewing a lot of products in relation to crypto derivatives, I think there's a lot of thought given to in the case of a liquidity market crunch, how would this affect the business model? How would this affect assumptions? And even the stable coins being used for the products. A lot more thought has gone in to think about a lot of the exit and redemption issues associated with these assets. Those are indeed big concepts that you're speaking of, and indeed there's a lot of potential in each area. I think going far beyond what we are talking about, just Web3 technologies. I think AI and some of the aspects you have mentioned there, blockchain, have really made great advances in the field of RegTech as well, and TradeFi. So I think where we see converging projects where they're really looking at changing traditional processes, enhancing efficiency, and I think the new watchword is how can some of these firms go global in terms of supporting different jurisdictions, supporting use cases across many countries where, as a legacy term, a lot of different jurisdictions have different laws. They may have different requirements applying to their financial systems and the way remittance services are traditionally run, or even how TradeFi services are normally delivered. And I think it's promising because across all lines, not only on the business aspect, but also the compliance and audit aspect, there have been significant changes in the way transactions are made, how transactions are screened and monitored, and also really rethinking how we think about the whole framework and universe of how things can be done. So I think what is promising is, this whole era of an unknown, what could be the next big thing, the next big issues that could affect this space, and essentially some of the people that we see working in these firms today could have a very strong say in how the future is also interpreted, especially in this time. In terms of the regulatory perspective, I think some of the issues which we often encounter are regulatory frameworks differing between different jurisdictions. So when it comes to firms which are operating on a cross-border basis, they often have to think about whether their model requires licensing, whether they have to vary in terms of the way they interact with clients, whom to put on the ground and support. Because often when you're starting a business, when you're advancing on compliance technologies, you have to think about whom to staff on the ground, and how you interact, how you comply with marketing requirements, how you comply with data limitation requirements, because some jurisdictions may limit the flow of data outside their jurisdiction, put into place certain controls. So all that thinking needs to be borne in mind in doing a risk assessment framework straight at the outset, rather than charging in and hoping that things will work out fine in future. It often takes us a lot of strategic planning as well in thinking about integrating with third parties. And I think more and more, because we are operating in such a universal world where where a lot of entities are dealing with basically it may be other payment service providers, it may be strategic partners, it may be investors, It may also be the reg tech firms which they bring on for screening, blockchain analysis, technology risk management. There are a lot of aspects to this which firms have to think about in terms of whether such partners are appropriate for the direction of their business, whether such third parties have the appropriate reputation in terms of due diligence of their framework connecting to the entity, whether it leaves them exposed to any particular technology vulnerability risk, and overall reputation, because after all, they are working with these partners, service providers, and the success of their business also depends on reliance on these partners. So I think that there's quite a lot to think about strategically, to work with phases, to work with governments, other parties. And I think the main challenge has always been trying to grapple that whole framework and to think about compliance in a very efficient and sensible way. So I think that is often the main challenge when it comes to regulations. Recently, I've been reading a book by Ray Dalio on the changing world order, which was actually quite impactful for me, because thinking about what are the signs we are seeing in today's age, which and how they mirror some of the market crashes or trends going back in the past, and how history can teach us about the future. Because often Ray Dalio had made a point that often we look at issues like ants almost, and we only see one part of the big picture, but it could be a rehash of what we have seen before. And when it comes to digital assets and the trends and market crashes, I think we have to address what are the underlying vulnerabilities, and could they happen again, and essentially what is the industry, what is the economy doing about it. But it's also accompanied by very important changes which are happening in the in the world order, as Ray Dalio puts it, because of the impact of interest rates, the impact of the property crisis in various jurisdictions, Australia, China, and other jurisdictions, and equities. We have seen quite a varying trend when it comes to equities in the market, especially in the last few months. The impact of big tech overall as well. And when you're looking at crypto in the face of all that, crypto has always been a very unique asset. I would not say that it's entirely predictable in that sense, as opposed to the various parts of the market. Some have called it a hedge to inflation, which I'm a bit puzzled by, given it's sometimes its trend of pricing. But I think investors, fund managers really have to think about whether they know enough about the more complex digital assets. And when it comes to staking, for example, and other types of market strategies, whether they are in play to understand the exposure of their portfolios to some of the changing trends in the world order. And basically a black swan event is something which is no longer underestimated in the market as we know it. And we are at a time of investment where things could all be quite volatile, and we are on the strand where basically there are a lot of opportunities, but they have to be managed very well. I think when it comes to government adoption, we are looking at a different trend, and we are looking at, as you pointed out, institutional adoption, the use of basically the blockchain for other types of technologies, the use of government supported stablecoin. I think the DCP in China has been a very good example of how this can be used by the retail consumer market if endorsed by the regulator, and what are the privacy and other business implications of big tech players which have been so far really the leaders of this space. I think when you're looking at all those different strands, the success of blockchain and cryptocurrencies, I suppose some will debate whether stable coins and on the institutional front are entirely cryptocurrencies. They draw a very strong distinction between both. But I think essentially there has to be support for some of these players, fintech players, which are developing new technologies in this space. They need to understand where they stand in terms of payments licensing, in terms of existing clearing and settlement frameworks, and how that interacts between different jurisdictions, and how they handle all these issues. And the very tricky part is always legacy settlement systems, because in order for a lot of these fintechs or the government to actually revamp the system where there are different legacy frameworks, they have to think about interoperability. They have to think about how the banks have to get comfortable with using stable coins or using something that fintech is proposing to use as a settlement tool for stable coin, and that is the challenging part, to get financial institutions involved and onboarded, and to convince them that basically this is going to be a long-term project which is worth investing in. I think there are very promising developments on this front. I think I would cite, for example, Partior, which has been development of Project Ubin in Singapore, and some of the advancements which they have had, really trying to think about, revamping the way clearing and settlement is done between financial institutions, and their advancement on that, I do see promise in a Partior-like model. I also see promise in accompanying efforts to actually improve and develop repos to actually improve and think about how due diligence can be made more efficient. But I think it has been very challenging at the corporate entity level as opposed to the individual level, where you have passports and other basic data underlying individuals. It's harder to get that information to be stored in a universal digital ID of a company. So I think all those efforts will definitely impact the success of how stable coins and how other types of technologies are implemented on the institutional and TradeFi front, because after all, AML and sanctions risk are front and center of the minds of both entities and regulators. That is an interesting question, especially in one of my friends quoted as such, I've been involved in the metaverse for over 15 years now, and it feels like it's only just gotten popular. So I know, so with Second Life and other types of online platforms, not online, but basically platforms which have existed for a long time, metaverse may not be as new a reality for them. I think what is different is the amount of investment that has gone into this space by big tech firms, by art galleries, by FIs, and I think it has enlivened the creative aspect of Web3 technologies and overall its interaction with the day-to-day aspects of living and the interesting parts of how we think about art and life and creation. And I think that is the interesting thing about it, because I first got attracted to doing regulatory work in digital assets because of precisely that part of how you are creating new possibilities in the world, something which is basically very used to legacy systems and way of thinking. And when it comes to the metaverse and AI and new technologies like that, it feels as though you are open to many new possibilities on how products and services and companies are interacting with consumers and delivering products and services with a very new frame in mind. I would say I beg to differ. And that's because I think traditionally in the stock market, one would bear in mind how stock markets are often associated with speculation, with hype, and and also trading based on perceived value and fundamentals of different assets, which to some extent does characterize the cryptocurrency market. But I do think that behind some of the projects, they are actually looking at real world cases. They are looking at integrating with the payments front, integrating with improving TradeFi, improving payments flows, and how this can be used for card payments of providers that we deal with on a day-to-day basis, from Netflix to the coffee at the bar. They're really thinking about real-world payments integration. And of course, we were talking about metaverse and all, and I think we also had bring up non-fungible tokens, which has become a very attractive area in the arts industry, and various creative projects associated with that. So I would say that I think cryptocurrencies and the involvement in digital assets goes far beyond just speculation, and I think it's a lot of these areas which are actually quite promising.